Hi, Colin here from Brown Wealth Management, and I want to introduce an article I just wrote on the Federal Reserve, which you've probably heard a lot about in the news lately, which is why I wanted to write this article. So I started off and I explained what the Fed is, who Jerome Powell is, what the goals of the Federal Reserve are, talk about in context of the last couple of years, what the Federal Reserve did in response to COVID, what tapering is, what transitory inflation is, which is a big buzzword at the Fed lately, and how what the Federal Reserve does impacts you, everyday investors. One thing that we're hearing about a lot in the news is inflation, and rightfully so. The cost of goods is going up, and people want their wages and their investments to keep pace with that so they don't lose purchasing power. And I explain that in the article, and those concerns are valid. Another thing that the Federal Reserve has control over that we think might be just as or more problematic is interest rates. And I talk about this in the article as well. So the Federal Reserve controls short-term interest rates, which basically represents the cost of borrowing money. And interest rates, as you know, are really low right now because the Federal Reserve cut interest rates when COVID happened to kind of prop up and spur economic growth. You can see, mortgage rates have been really low. More people have been buying homes. Businesses like low interest rates because they can go out and borrow money cheaply, which they can use to invest in their company, grow company profits, earnings, etc. But as Jerome Powell has hinted at, and as everybody basically knows, interest rates can't stay low forever. And eventually they're going to rise, which is going to hurt those borrowers. Mortgage rates are going to go up again. Businesses are going to have to spend more to borrow the same amount that they were borrowing before. And it also has mixed impacts on lenders. Interest rates, when they rise, it makes new issues of bonds more attractive. But if you already own bonds, which say you bought a bond a year ago paying some lower yield, it's going to look less valuable compared to the new ones being issued today. So lenders have mixed effects, and basically interest rates have this trickle-down effect on all parts of the economy. So I touch on how that kind of plays into our investment decisions here at Brown Wealth Management. One of the rules we like to use here is don't fight the Federal Reserve, or what central banks do matter. They have so much control over the money supply, we like to invest in a line with the Federal Reserve. And I explain kind of how we do that and give some examples in the article. So check out the article. Thanks for listening and watching. And if you have any questions, reach out to one of our advisors. Thanks.